Well, will the Federal Reserve raise rates in the July FOMC meeting? The market is saying it's a question really of when, not if the Fed raise rates now. Now, I think it has crept up on us. A lot of people are still talking about the magnitude of potential cuts going forward as the labour market calls, but the market is now high on conviction that the next move will be a hike, and it's a question of timing and the potential extent of where the Fed funds rate could go. Now, I think last week's Fed meeting was defining, and we saw Kevin Warsh's first tenure as president and chair of the Federal Reserve. He was unambiguously hawkish. The dot plot projections were significantly more hawkish than the market was prepared for. It was the biggest reaction, the most powerful reaction we've seen in the first meeting of a new Fed chair that we've seen since 1978 when Bill Miller came on board there as well. So the move that we saw people positioned offside. But what we're seeing now is a Federal Reserve review. Kevin Warsh has come on and he's going to change the way that the Fed architect and orchestrate monetary policy. They're looking at the balance sheet, they're looking at jobs and productivity, they're looking at their inflation framework. Is core PCE deflator the right metric which they need to look at? And I think really importantly, and I think this is the most important factor, is their understanding about communications to markets, forward guidance. Now, central banks have been using forward guidance for quite some time as a mechanism to suppress volatility and allow a lot more predictability and certainty around a Fed meeting. So all these different Fed meetings, all these Fed speakers come out, tell people how they're thinking about policy, what they're thinking inflation, what they're going to vote on rates. And that allows us to go into the central bank meeting very certain, or at least quite certain about how we're going to see the vote. And that allows us to price with certainty, and that reduces the volatility. So changing the communication, reducing the statement means that we're going to go into each Fed meeting uncertain. And that means higher volatility in rates, higher volatility in the FX market and the dollar by extension, that situation. And that's a really big situation. But look at what's happened now. Inflation, we're going to get core PCE coming out on Thursday. The market's expecting 3.4%. That increases again. That means that we're going to see the Fed's inflation target above target for, well, since 2022, so 5.5 years. But look at market pricing now. We're seeing a 38% implied probability priced into swaps for a hike at this meeting, coming through on the 29th of July. If they don't hike then, well, there's nearly a 93% probability priced in. The market's saying it's nearly a done thing, a certainty that we're going to get a hike by September. And entirety, of course, we're going to see 50 basis points of hikes coming through. Where has that come from? 2 weeks ago, we were still talking about cuts. It's now talking about hikes. Core PCE this week, we're going to get the employment number, the non-farm payrolls on the 2nd of July. On the 14th of July, we get the next inflation number. That could cement the situation. Now, Kevin Warsh will be speaking to the House panel on the 14th of July, just after the CPI print, and that could be the situation, depending on what the outcomes of those numbers are, where we could see the cat open the bag. He could release the idea that we could see a rate hike coming through. The US dollar has now traded above the top end of its 14-month range. It's broken out above 101 now. We're seeing high volatility implied in the front end of the Treasury curve. We've got 2 years at 4.21%. That has a really big meaning for markets. I don't think people completely appreciate just how significant that Fed meeting was. The moves we're seeing, the bond market and the dollar now reflecting that. We could be looking at a situation where the Fed could be looking to raise rates in July. If they don't, the next meeting after September. So what does that mean for markets? Let me know how you're seeing things. Is that too optimistic? Should we be talking about cuts? And what do you think about the US dollar here?